Assalamualaikum warahmatullahi wabarakatuh. We are from Group 6. We will present the annual report from Seng Capital Berhad Company. Assalamualaikum and hi, my name is SYAZA Aisyah binti NAZARUDIN. My matrix number is S67156. Today I want to present about the introduction about the company that we choose, which is Seng Capital Berhad. Seng Capital Berhad is a Malaysian public company primarily involved in poultry farming and more specifically the production and sale of chicken eggs. The company is managed by a strong management team with extensive knowledge and experience in the poultry farming sector. They are committed to supplying quality and nutritious eggs and value-added product to consumers and customers. They are able to cutting-edge farming methods and modern technology to uphold the highest standard, the product quality and safety.
Assalamualaikum warahmatullahi wabarakatuh. My name is MAISARAH binti ZAKARIA. My matric number is 7787. Okay, now I'm going to explain about MFRS 116 PPE. Based on annual report notes 11 statement of financial position, Seng Capital Berhad, the company lists assets used for operation and manufacturing product. Those held for use in the production or supplies of goods or service and related to operational segment of business. Seng Capital Berhad recorded for each major component of the position is determined separately for each significant part of an item. Okay, next, MFRS 140 investment property. Based on annual report, Seng Capital Berhad does not apply MFRS 140 because the company did not provide specific information about the asset related to investment properties. Next, MFRS 15, revenue from contract with customer. In annual report note 3 had said that when or as the company transfer control of the product or service promised in the contract and the customer receive control of the goods or service, revenue from contract with customer is recognized with reference to each separate performance obligation made in the contract. Seng Capital Berhad follows the 5 steps on how to recognize the revenue, which measuring income precisely, assigning it to specific performance duties in contract, and then realize revenue when each obligation is complete.
Assalamualaikum, my name is SYAHIRAH binti SALLEH. My matric number is S65477. Today I will present on accounting standard and policies for MFRS 138, 137 and 110. Firstly, for MFRS 138, which is for intangible asset. Based on Seng Capital Berhad Annual Report 2022, it shows that the company have goodwill arising on consolidation in financial statement. So we can refer to note 13 in note to the financial statement that already stated that initial measurement and recognition of goodwill arising in consolidation for the year 2022 is RM 102424. Seng Capital Berhad also have intellectual property rights such as patents and trademark which considered as valuable intangible asset for any businesses. Overall, Seng Company complies with MFRS 138. Next, MFRS 137, provision, contingent liabilities and contingent asset. For Seng Capital Berhad, in the written notes already stated that at the date of this report, there are no contingent liabilities in the group and company which has arisen since the end of the financial year. This company also doesn't have provision and also contingent asset. So Seng Capital Berhad does not apply MFRS 137. The last one is MFRS 110, events after accounting period. Event after reporting period are those events favorable and unfavorable that occur between the end of the reporting period and the date when the financial statement are authorized for issues. As we can see in the part of investment in subsidiaries, there is changes in the year of 2021 and 2022, which is the value in 2022 is 130,807,285, while for 2021 is RM 96,807,285. We can see there is an adjustment for changes in carrying value of subsidiary acquired for investment in subsidiaries in the previous year.
I'm SAJEEDAH binti ISMAIL, matric number S66102. Today I want to present about disclosure of non-current asset of Seng Capital Berhad. I'm start with property, plant and equipment. A few points that highlight was nature of asset, which is tangible, non-useful life, about recognition criteria, which is future benefit, economic benefits, measurable cost, and others. The conclusion of PPA was represent a substantial investment in the company's long-term operation, plays a crucial role in generating future economic benefits, and requires careful accounting and depreciation to accurately reflect its value over time. The second one is intangible asset. Seng primarily has one identified intangible asset in their 2022 report, which is goodwill. Goodwill from acquiring professional bad enterprises. Seng goodwill satisfy the key and meet MFRS 138. Recognition criteria for intangible asset identifiable, lacking physical substance, cost can be reliable measure, and others. The third one is investment properties. Seng company does not apply MFRS 140 because there is no information about it in the annual report. The last one is biological asset. Transformation of biological asset, living plants and animals, into agriculture produce, harvested product of the entity's biology asset. Measured by predicted cash flow minus selling cost. To recognize biological asset, entity must control the asset as a result of past event. The disclosure requirements for biological asset are set out in MFRS 141.
My name is ZALANI binti Abdul. My matric number is S66286. Today I'm going to talk about economic environment and asset valuation. Seng Capital Berhad annual report for year end 2022 shows significant non-current asset, which are property, plant and equipment, amounting to 375,221,726 and increasing by 1,778,794 from last year. As you can see, the initial cost of freehold land, farm and poultry building was 181,477,505, but increased to 191,193,520 after reclassification, additions, disposal and write-off adjustment. For accumulated depreciation, the net carrying amount at 31st December 2022 after subtracting the write-off and accumulated depreciation from the initial cost at 1st January 2022 is 144,782,313. As for economic factors, there will be three factors, which are inflation, interest rate changes, and market volatility. We will go one by one. As for inflation, Seng Company, a poultry farming division, experienced a 24.3% rise in sales revenue due to higher egg prices despite global inflation. This led to increased pre-tax profit and potential consolidation of smaller poultry farms. Next, interest rate changes. Interest rate changes at Seng have reduced borrowing costs, enhancing cash flow and profitability. This has led to increased investment opportunities such as equipment and manufacturing expansion, and reduced capitalization eligible borrowing costs. Last economic factor is market volatility. Seng Company may benefit from market volatility, potentially profiting from price fluctuations and increased investor interest, potentially raising capital for expansion and gaining a competitive advantage.
My name is SYAZA binti NAZARUDIN. My matrix number is S67156. I continue with the last question, which is analytical and engaging presentation. Firstly is assets. From the report, we analyzed that the non-current asset is increased by 1,347,801 with percentage of 0.36%. Next, for the current assets, is decreased by 3,552,210 with percentage of 1.45%. So for the total asset also decreased by 2,204,409 with percentage of 0.35%. We move to the equity. From the report, the share capital remained the same. So for the retained earnings increased by 21,639,225 with percentage of 7.61%. So the total equity increased by 23,118,732 with percentage of 7.42%. The next is liabilities. From the report, the non-current liabilities decreased by 7,514,774 with percentage of 8.72%. The current liabilities decreased by 17,808,367 with percentage of 7.92%. Total liabilities decreased by 25,323,141 with percentage of 8.14%. So for the total equity and liabilities also decreased by 2,204,409 with percentage of 0.35%. We move to the next slide, which is financial ratio analysis. First, fixed asset turnover. The formula is net revenue divided by average fixed asset. For the year of 2021, the fixed asset turnover is 1.40 compared to the 2022. The fixed asset turnover is 1.72. So if the fixed asset turnover ratio increases from the previous year, it indicates that the company has used its fixed asset more efficiently to generate sales. Next is ROA, which is return on assets. The formula is net income divided by average total assets. So for the 2021, the ROA is 0.77% compared to the 2022 is 4.73%. So if the return on asset is increases from the previous year, it indicates that the company has generated more profit of assets than it did in the previous year. That's all from us. Thank you.